Hello and welcome to Blythe Business News. For this edition, I'm joined by Nick Bridgen, who is Chief Executive Officer of Ferro-Alloy Resources. Ferro-Alloy Resources, listed in London on the main market, a ticker, a symbol of FAR, and a market capitalisation of around £31 million sterling. The company operates in southern Kazakhstan, where it is a vanadium producer. Nick, welcome on the show, your first time with us. Now, last month, the company announced a significant update with regard to your carbon black substitute product. Now, I'm going to guess that not many viewers are familiar with the company or nor with carbon black. So can you give us a quick overview of what carbon black is and how a substitute is recovered from your vanadium process?
Yes, well, as you said a moment ago, with our primary business, our primary product is vanadium. We have a very nice vanadium project. It's very, very large. And because of its characteristics, we'll probably end up the largest producer of vanadium and the lowest cost producer in the world. And that's what we started life to do a feasibility study on. Now, let me just say 9% of our ore is carbon. And so we were obviously looking at potential uses for it. And we found that the type of carbon that we have is very, very similar to a high-value form of carbon called carbon black. And carbon black is normally manufactured by burning hydrocarbons. And it sells for upwards of $1,500 a ton, sometimes quite a lot more than that, partly related to the oil price because of how you make it. And we found that our carbon is chemically and physically the same as carbon black, but is wrapped up with silica. So we have to, the carbon goes through the vanadium process, comes out unscathed at the back end, and would go into a tailings dump. It would be dumped, but we can recover that carbon. We concentrate it to about 40% carbon, just in a very simple, low-cost concentrator. And then we mill it, and then it becomes a product very much like carbon black. Now, I'll just say a little bit about what carbon black is, because not everybody knows. Although it's ubiquitous, it's what makes rubber black. So why are tires black? Rubber hoses black? They're black because you make rubber by cooking up latex with carbon black and maybe some silica and maybe a few other additives. But broadly, that is what rubber is. So it's an essential component of all rubber. So it's a huge market, $20 to $30 billion, according to what source you believe market. Huge market and a very high value product.
Okay, so you're producing this carbon black as a byproduct of your vanadium process. Now, in the market update you gave recently, you said that you'd also done a marketing study to look at the commercial potential of the carbon black. Can you give us some of the highlights, please, from that marketing study and an insight into the scale of the opportunity?
Yes. Well, actually, we've done two studies with Smithers. Smithers is an international, highly reputable specialist rubber company. Well, they hope they do other things, but they have specialist rubber capability, well known and highly reputed. And they've done two studies. They've done a technical study where they took all our previous work that we've done with universities here in Kazakhstan and in Belarus, and done a whole battery of tests where they've tested substituting our material for carbon black at various percentages in making rubber, particularly focusing on passenger car tire sidewalls. That's a major use, a bulk user, and it's a very difficult technical specification. So if we can meet that spec, we can meet any spec. And they found that our material partially substituted for carbon black, makes very, very good rubber. It has some advantages over carbon black. It has better rolling resistance and better abrasion resistance. And in all the other tests, there's a whole battery of tests that they use to measure the performance of rubber. We were not significantly worse on any of them. So we know we can use our product for making tires, a very tough, demanding use. So technically, we're there. Our material can be used. And then they did a marketing study. They had another marketing department which took the technical spec and compared us with other products on the market. The general name for our type of product is what's called a reinforcing filler to go into rubber. Nearly always it's carbon black, but there are some other products. And compared our technical characteristics and using those comparisons, came up with a price recommendation of $500 to a little minimum $500 for selling it per ton. Obviously, that's a discount from real carbon black's price to make it attractive economically, but it's still extremely good for us. I mean, that's huge because, as I said, 9% of our ore is this carbon. We can produce about 220,000 tons of it a year. 220,000 times $500 is $110 million revenue per year from just phase one of our project. And with very little processing, it's recovered from tailings. So all the costs are already borne by the vanadium operation.
Okay, so significant financial upside for the company. Quick question though, carbon black substitute and standard carbon black, does the carbon black substitute have any environmental advantages?
Yes, this is a very important part of the story because making carbon black the traditional way, burning hydrocarbons, means that most of what you start with, the oil or the gas, goes up the stack as CO2. Bad for the world. And because the tire market is so huge, there's a significant amount of the world's CO2 goes into the air because of tires. So the tire companies have all been looking for a way of reducing their CO2 footprint, both on what they do themselves, but more importantly on the carbon black that they have to buy. Now, our material, because it's naturally occurring, we're not manufacturing it. All we're doing is taking it out of the tailings and concentrating it. We have much, much lower CO2 consumption per ton of product. Roughly, traditional carbon black has between 2 tons and 5 tons of CO2 into the air per ton of product. And we haven't quite finished the sums, and then there are different ways of doing it, but we have around half a ton. So the worst case for us is a quarter of the best of the rest. So a huge saving in CO2 into the atmosphere. Now, that's obviously a good thing for the world and very good for bragging rights, but it has a monetary value too, because the world is moving to a carbon trading system where manufacturers in Europe, for example, but in California and various other parts of the world, have to pay buy credits for the carbon that they emit. And those credits are going to be cranked down as time goes on. At the moment, companies have been given free issue according to what they were previously emitting. But obviously, as the world moves to net zero, those limits are going to be cranked down. And the value of a carbon trading ton of CO2 is currently in Europe over $70, and in other markets up to $100. And those figures will rise. And those figures have not been factored into that $500 per ton recommendation from Smithers. So this sort of carbon trading potential will be additive to that in terms of value. But it's not just the monetary value, it's also the fact that companies are going to have to reduce their carbon. So they have a huge incentive to buy our material, both on a cost basis, cost-saving basis, carbon trading basis, and saving the world basis.
Okay. Now, another recent announcement, you've said that your current operating plant is going to shift its focus to be more a research and development operation so that you can pursue the opportunities, the commercial opportunities that carbon black substitute delivers. Can you just expand on the rationale? It's quite a strategic shift. Just give us an insight to the rationale behind it.
Yes, it seems like a shift, but it's an obvious one, really, because our focus has always been on getting the project done. I mean, the Competent Persons Report from several years ago had the phase 1 and phase 2 value at over $2 billion net present value of the project. Nowadays, I think it's going to go up quite significantly because of this carbon story and general inflation and things. So we're talking about a multi-billion-dollar value project. And we have been operating this small plant, and we sometimes get lost in it because it was the pilot plant, and we wanted to keep our team of people together, and we wanted, something, a little bit of cash flow to while we do the feasibility study. But the aim has always been the feasibility study because the current plant is ridiculously small in comparison. So now we're within months of finishing the feasibility study. We've done all the main parts of it. We've done the resource work. We've done the metallurgy. There's just a few bits and pieces still to do. But there's a few things that we can optimize during these last few months. And so we want to devote ourselves to getting these last few things done. We call them R&D, but they're really mainly items which will feed into the feasibility study. We can increase, we think we can optimize further the leaching performance. So that's one thing we'll be doing. And we want to look at how to get higher purity products, because there's a big market for higher purity vanadium products and a premium market. You can get a much higher price. And particularly, it's a whole new story and worth another interview, I think. But there's the vanadium redox flow battery story, which is it's the front running technology for bulk energy storage. Requires high purity vanadium, and it requires different oxides, not the standard vanadium pentoxide V2O5. It's V2O3, V2O4, and high purity, and we want to research doing those so we have the capability when we do the final design of the plant to give us the optionality to produce those products. And last but very much not least, and on the topic of today, we've already procured all the equipment to build a pilot plant to produce this carbon concentrate. We'll produce it directly from ore, not going through the vanadium process. So there'll be tiny differences between this product and the product we'll eventually have. But it will enable us to establish a foothold in the market, give samples out to people, get people interested, and get an offtake agreement ready for when we start producing 220,000 tons a year on day one.
Well, Nick, as you say, there's an awful lot more in there for even more interviews. I look forward to having those conversations with you. Before I let you go, what should viewers, investors, potential investors be looking out for as the next couple of steps for these various revenue streams you're developing?
Well, I think I've said that securing an offtake is going to be the significant next step, because this is a non-standard product. You can't look at an index somewhere and say it's worth X. So we have to create this market. We've got a Smithers technical report, Smithers marketing report to go on, but still we have to get an off-taker. We've got a lot of interest. We've gone to various carbon black conferences, and everybody we talk to is interested in it because it's what they've been looking for. And of course, the other thing, I think I've already alluded to it, but this is phase one we're talking about. This vanadium project is huge. We have 7 ore bodies identified, and phase one is based really around just one of those ore bodies. Now, some of them are bigger and some of them are smaller, and some of them haven't been drilled very much, so we don't really know what's there. But for the sake of rough estimation, we've got 7 times more ore than we're using in this phase one. And phase two, we've already started planning, will take us up to about 3 or 4 times more production than this one. So we will make even though the carbon black market is huge, as I said, $20 or $30 billion a year, we will be a big supplier in it once we get phase two going, and probably beyond my lifetime, in phase 3, phase 4, and phase 5. So we'll have an impact on both markets, vanadium and carbon.
Well, Nick, thank you so much for that update, and we wish you every success. And please do come back and keep us informed as things develop in Kazakhstan. That was Nick Bridgen, Chief Executive of Ferro-Alloy Resources, telling us about the very exciting developments on producing carbon black substitute as a byproduct from their vanadium processing. That's it for this edition of Blythery Business News. Thanks for watching.